At this point of time in the market, I am sure there are some baskets that look attractive to you as far as sectoral positions are concerned, and of course individual stocks. Anything that you are advising your clients at this point of time which should be added to the portfolio for the long term, sir?
Yeah, good morning, sir. Thank you so much. I mean, what has happened and what has changed in this market is the sectors which were earlier defense sector or safe haven with a low growth kind of a trajectory, they have turned out to be high beta sector with a high growth trajectory. So, just to put the case in point, being the power sector is one where earlier it was more of a utility kind of a sector, and now people are looking at as a multi-year growth cycle setting it out there. And as has been confirmed, I mean, the government of India already plans to, build in 60 gigawatt of power capacity from renewable sources every year. And that is precisely what we need. Because if you see the power sector demand of around 8 to 9% year-on-year basis, and thermal and wind put together, the PLF is 32%. So 10, 12 gigawatt or 20 gigawatt per annum is the additional capacity we need to run on this consistent basis. I'm not talking about 24 by 7 power for the entire India. So power is one sector. The second sector is defense sector, where it has been a complete turnaround and it has been doing phenomenally well. If you look, what was the problem with defense sector was first was the execution problem. Second was the payout being received by the from the government of India. Both have turned around. The execution has been much faster. At the same time, the payment cycle has been improved. So working capital strain is not there no longer, and their operating efficiencies has improved quite a bit. Make in India also makes a very good case for them because of all this PLI scheme.
Right, Mr.
So
Kant.
yeah, yeah, sure.
Dharmesh, that's the background of the defense sector is pretty well known. We've seen a very, very sharp rally coming in over the last 6 months or so. The fundamentals have been discussed quite a lot. Is there a particular stock that you look at as far as the defense space is concerned, which you are advising your investors to take positions in, sir?
Yeah, so I mean the entire basket is attractive, but Hindustan Aeronautics is one stock where still I think there's a lot of valuation comfort out there. Because if you look at the valuation matrices around profitability growth of 25 to 30% kind of a CAGR, which it has been doing for the last 7, 8 years, is likely to be there for next foreseeable 3 to 4 years further. Order book has been swelling pretty fast. The book to bill ratio is around 3 times now. At the same time, ROEs are 27, 28%. It's available at 18, 19 times 1 year forward earning multiple. With more fighter jets being made in India and fighter choppers being made in India, the book size is going to change February in the favor of Hindustan Aeronautics. So rather than operation and maintenance kind of a platform, it is more into the manufacturing side, which is margin accretive. So this is one stock which we have been recommending for last 6, 7 months, and we are continuing to recommend this. I mean, our 1 year price target for this is 5,500. So pretty of risk reward ratio favorable for HAL. If there's a dip, one should be buying into it. And if you are willing to wait for a year, 5,500 is the price target which we are looking forward to.
Okay. Dharmesh
Fantastic. Let's just discuss a bit of Hindustan Aeronautics in detail. We've seen this debt-free company do a fantastic rally of about 60% over the last 1 year, and at this level, which is somewhere like sub 4,000, 3870, the all-time high was about 4181. The company is valued at about 1,29,000 crores in terms of market capitalization. Revenue is 27,220 in terms of trailing 12 months, and it's a fantastic earnings of about 6,021 crore rupees. Remember, even at this level, the PE is sub 22, and if you look at the forward PE, it's somewhere like 18, 19, as Dharmesh mentions it. Sakshi.
Absolutely. Dharmesh, I just wanted to ask you, in link with the defense stocks, we've also seen the second rung stocks like, shipbuilder stocks especially, them also, rallying very, very sharply. Cochin Shipyard, Garden Reach, also Mazagon Dock, these kind of stocks. What do you make of the kind of move that we've seen? Of course, in the last week or so, we have seen some kind of profits being taken off, for most of them about 8-10%. But over the 6 months perspective, most of them are up by 100-150% odd. Your thoughts on these particular stocks?
Yeah, sure. So actually, what has happened with most of the public sector undertaking, be it defense, railway, or other sectors, I mean capital goods. So they have been now re-rated at par with the private sector players. So valuation multiples which used to be assigned to them was a discount of 30-40% to the private sector players, which have changed because of the entire operating efficiencies and the entire business outlook has changed for them. Shipbuilders definitely I mean they have ran up too hard, and I think now they are more of a fairly priced kind of a scenario. So if you are holding it, please continue to hold them but the vision should be long term. It should be 3 to 5 years kind of a holding period horizon. Then only I think meaningful gains can be had from current levels, because it's a lumpy business, and execution and the revenue booking takes time. It's not on a even basis, a quarter on quarter kind of a basis. It doesn't happen here. Around if you are building a ship, it takes around 2.5 to 3 years for the entire ship to be built and commissioned. However, as far as
So,
operational maintenance is concerned, that flows. So, recommendation is holding on to them.
okay. How about the railways pack? That also segment has been a big outperformer in the recent past. Any particular picks from here?
See, in railways, we have been recommending RVNL. I think with a lot of focus was on coaches and bulletins being built up, but you need tracks to run them on, and this is where RVNL comes into play. And most of the narrow to broad gauge and high capacity railway tracks are being laid out. At the same time, they are also into bridge construction. So railway infra is going a complete overhaul, and with the high speed trains coming to play, the entire thing has to be put into place. Here also the book to bill ratio is more than 2.5 times. So order book is strong. Execution has been very strong for this company, and this stock has been re-rated quite a bit. But still, I think there's a lot of juice left out there. So we are basically targeting a price target of 210, 220. But this is not based on a 1 year price target. This is based on FY26 earning multiple. So there we think if you take FY26 into account, it's still available at 17 times PE multiple based on FY26. There's value buying out there. One is to wait for 2 to 3 years. So this is what we have been recommending on the railway side.
Absolutely. Sakshi, you've seen RVNL go up by about 1.4 times so far in the past year to date, which is in the past 9-10 months. And it's been a phenomenal rally on RVNL. So due risk measures need to be employed when you look at this company. In the past 1 year, Sakshi, the stock has gone up by about 3.8 times. And even at these levels, relatively, like I said, compared with the other peers in the railway space, RVNL looks a little more attractive. So with the overall thought of the infrastructure spending happening in the railway space as far as markets are concerned, RVNL is a long-term pick for your portfolio. Remember, if this stock rallies, then obviously you stick to it, but dips are to be purchased. Also, please consult another financial advisor should you take positions on the long side in Hindustan Aeronautics and RVNL. These are two picks given by Mr. Dharmesh Kant.
If you like the video, do like, comment, share and subscribe.